Thanks for that. Yes, this is a big network exclusive. The key chief architect of Budget 2016, Arvind Subramanian, chief economic advisor, joining us live and exclusive on ET Now and Times Now. Mr. Subramanian, thank you so much for joining us on the Times Network. My first question to you, sir, is on the fiscal deficit. Have you played it safe? On one hand, you've tried to appease those who didn't want you to breach the target by saying you're sticking to 3.5%. But on the other hand, you're saying that the entire FRBM Act is going to be reviewed, giving yourself the possible leeway to relax your targets in the medium term. Has the government played it safe on the fisc?
Yeah, I think that, let me just outline how to think about this budget, yeah? First, as we said, in an uncertain global environment, the first task is to maintain macro stability, right? There, I think the two critical things I would say are, the fiscal anchor and the monetary anchor have been, put in place firmly. The fiscal anchor, 3.5% of GDP as announced. And the monetary anchor, you can see the MPC agreement with the Reserve Bank is going to be, the legislative framework to put that in place is going to be initiated in this budget. So fiscal and monetary anchors are firmly in place. So I think that's the first point. I think the second point, remember that the economic survey said, how do you balance that, while also balancing the growth objective in the face of headwinds? And you will notice that, fiscal anchors are in place, but also, tax to GDP ratios are not going up significantly. So any breaks that can come from consolidation have been alleviated to that extent. So that's, I think, the first point on the macro side. I think on the tax side, I think last year we committed to a corporate tax cut. I think some very significant variant of that is going to be implemented. New firms 25%, medium and small enterprises 30 to 29%. I think that's very good. Even the nature of some of the taxes are very desirable, like the coal cess, the taxes on cars, so environmentally very friendly, and also the presumptive tax. Increases taxpayer convenience for the small person. So on the tax side, you have a very nice balance of some small increase in taxation of a desirable sort while making it easier for small taxpayers. I think that on the expenditure side, I think that there are some really, one of the really big things is, this the bill that will put Aadhaar on for granting direct cash transfers on a legislatively secure footing, which means that the whole JAM and DBT agenda can be put in place, and of course it also signaled that DBT in fertilizer,
Mr.
as we said in the
Subramanian,
economic survey, there would be pilots would be started. Yeah,
Mr. Subramanian, good afternoon. Arnab here. Welcome to the network exchange. You were one of the advocates of deviating from the fiscal roadmap. The finance minister has deferred. He's chosen to stick to the targets. Are you disappointed?
No, not at all. Because remember that what we'd said in the survey was you both want your macro stability without, putting too much of a drag on the economy via aggressive fiscal consolidation. And the key thing is that, we've maintained the fiscal anchor, we've maintained the monetary anchor, but we've done it without raising taxes unduly, so that aggregate demand is not going to decline, not at all even. So the balancing of the stability with the growth has been done, I think, in a very, very importantly balanced manner.
Okay, so I just put one question here, then Sandeep goes, and then we'll toss around a bit, because Mr. Subramanian, there are a lot of economists here, experts on the panel, and they want to also have a short question. I'll allow that, but just one quick thing before I hand over to Sandeep for the next one. You see this, I'm just looking at it from the point of view of the middle class. The income tax slabs have not been restructured, right? Now, given that there isn't a huge thrust in terms of savings under Section 80 and 80D, is this government only inviting unfavorable middle class sentiment? Because prices of goods will increase with a 0.5% agricultural cess.
No, I think it's very important to remember that the tax to GDP ratio in this budget, which is what ultimately will determine price increases, is barely going to budge at all. So I think the impact on prices, I think one can be pretty confident won't be there. Moreover, I think with the fiscal consolidation, I think you're going to get actually some favorable effect on prices. So I think broadly, I think that's not the concern. On the middle class, I think there are lots of benefits in terms of, the NPS scheme, which is being the convenience for small business owners, the housing benefits. So I think there is a lot in here for the middle class as well. And of course, there's a lot here for farmers, which is one of the constituencies that have been very badly affected in the last couple of years by, the monsoons and so on.
Sure. Dr. Arvind Subramanian, now that there's some clarity on the fiscal roadmap, how soon do you expect the central bank to cut rates? Because markets are going to keenly be awaiting that rate action from the central bank. How soon do you expect your friend Raghuram Rajan to cut rates? And also, do you think there's enough in this budget to kickstart the investment cycle, to create more jobs in the economy?
Yeah, I think on the interest rate cut, we said in the economic survey that there's going to be, there's room for monetary easing. And I think this budget, both, by solidifying the fiscal anchor and the monetary anchor, I think reinforces that what we said in the economic survey. So I think, in terms of timing, that we don't have any control over, but that's for the RBI to decide as they should. I think in terms of the investment cycle, I think all the benefits on the ease of doing business, the taxation side, the providing the macro stability. I think, for example, the spending on rural roads, the Gram Sadak Yojana, the spending on railways, roads, and rural roads, I think. Is kind of, filling in for whatever weakness of private investment there is. So I think public investment is going to be kick-started by this budget.
Okay, so Mr. Subramanian, we've got, what happens, Sandeep and I are sitting here, we're taking your time, we're being very undemocratic about it when we got so many experts. So what I'm going to do, Sandeep, is that on this network exchange, with exclusive for the first time, India's #1 business and news channels come together for this joint broadcast. Mr. Subramanian, just want to let you know this interview of yours is being simulcast to all the viewers of ET Now and Times Now in India and across 82 countries as we speak. Couple of questions. I'll just take it very short, no comments, but more questions. We let Omkar and Rajiv go first, and then we'll toss it around. Omkar Goswami and Rajiv Kumar. Yeah, Omkar.
Hi, Arvind. Omkar here. Congratulations on the one thing which I think many of us wanted.
Hi, Omkar.
Is your ability to hold on to the 3.5% fiscal deficit for FY17. However, it's a tight ask. And how tight is it, and how much discomfort will it cause you at night?
Okay, what's Rajiv Kumar is also asking a follow-up. Rajiv.
Hi, Arvind. And my question simply is that what is the increase in public capital expenditure this year over the last year? And that's specifically what I want to know, because that's the key to triggering the investment cycle. What is the actual increase? I mean, you people must have worked out the numbers. Yeah, what is the increase in public capital expenditure?
Yeah, so the first question was about the anchor is in place, how tight it is. I think, my answer is that in the last 2 years as well, we had very tight asks and the government was committed to meeting the target. So I think, that commitment on the part of the government to, meet whatever target it sets is, it's not a future promise, but something that was achieved 2 years in the face of, a fair amount of fiscal challenges. So I think that should reassure markets and the world that, we've set a target, we will absolutely do everything to meet them. So that's, I think, not on the public expenditure. I think if you put together, what the center is going to do and what it's being allocated for the states as well. I think it is going to be substantially greater than nominal GDP growth. So I think, in that sense, now that's just the budgeted amounts. There are also these, the bonds that the government is issuing for roads. So if you look at total capex that's directly or indirectly supported by the budget, that's a substantial increase.
I'll go, hand it over to ET now, to Supriya and Sandeep for the next.
Sure. So thanks, Arnab. Swami here also has a question for Arvind Subramanian. Swami, over to you.
Arvind, congrats overall. I'm so glad you stuck to the 3.5% fiscal deficit. Two immediate questions. First, if you're going to get your corporate tax rate down to 25% 2 years from now, the first step that you've taken looks much too little. Covers just a very small number of companies, only down to 29. Haven't you left yourself much too much to be done in the next 2 years? Secondly, we keep hearing about strategic disinvestment. We heard last time, this time. No, please, can you name me just one company or at least two companies where you are actually going to do the strategic disinvestment?
No, Swami, on the first point, remember, there are two components to that. One is, the reduction from 30 to 29 for companies up to 5 crores, right? But the tax rate is going to be cut from 30 to 25 for all new firms coming into manufacturing. So there's a big amount of that which should be of interest to the private sector. The second thing, Swami, I think that look. If that if I were to name a name, that would be bad disinvestment policy, because markets will anticipate that and beat down the prices and so on. So I think that there is going to be strategic disinvestment. I think it is going to be based on a policy framework that the government has prepared, and so I think that's what I think you should be looking at.
Okay, sure. 1 second. So what we are going to do now is we're going to take a couple of quick questions. We're going to go first with Navika, then Sanjeev, I think, and then we'll hand it back. Yeah.
Arvind, the question many are asking is 25,000 crore that you have provided for bank recapitalization. Is that too little from the market expectations, and will that be something that will invigorate the banks to lend further, considering that they have such huge problems on their balance sheets?
And this is Sanjeev. And Sanjeev Sanyal's also adding up to that, Arvind.
So I think
Sanjeev also has a follow-up. Please take both together. Thank you.
Yeah, so my question is slightly different. You see, great that, we are holding on to the fiscal deficit target. Great, there's an emphasis towards agriculture. But as far as the middle class is concerned, we have continued with this very minutiae approach of exemptions. Why not give them a large standard deduction in the right in the upfront, and get rid of all these exemptions? Surely that's much easier for everybody. It's certainly the middle class doesn't have to go to a chartered accountant every year with all kinds of pieces of paper. Wouldn't that be much better?
Sorry, what was the first question again? The second was the middle class. There was a good first question as well.
What was that? The bank recapitalization, 25,000 crore that's been provided.
Bank recap, yeah. So I think on the bank recap, the finance minister made very clear in his speech that should additional resources be necessary, the government will stand by to provide it. So the commitment to support the PSBs is there. So I don't think that should be an issue. The second thing is on the middle class. I think that there have been. Firstly, remember that the tax to GDP ratio is going to be So the fact that there are no serious tax increases on the middle class it should itself be quite reassuring. And then in terms of going for a big bang or a minutiae approach, I think there are pros and cons both ways. But the fact is, as I mentioned, there are a number of important measures that are going to help the middle class. The house rent allowance for the small and medium business, presumptive taxation, which is going to do thing, and whatever tax increases there are of a very desirable, things that create negative externalities, like the coal cess, the tax on things, and for the middle class, the house rent allowance deductions, which I think that, you should think of it also in terms of, encouraging mobility across, when people want to come to big cities to get a job, if rental costs are high, now there's a higher deduction for rentals.
I have one question before I wrap up, Arvind. Yeah. This is Arnab here. This is a question I ask every year, but I get no answer. So let me see if you answer. Not that I'm holding you responsible for it. But if I look at the last 19 years, taxes on cigarettes have increased by 1,606%. Taxes on BDs have only been hiked by 7%. I want to know why government after government encourages people to smoke BDs.
That's true. Good question. It's a good question. You should ask the revenue secretary or the finance minister that question. But we have increased taxes on things that pretend to be cigarettes.
Listen, Arvind. Arvind, don't take it otherwise. This is my Brahmastra question, which I ask every year. Last year, I asked the question to Jansen. He was also fumbling, which I began by saying it's not your fault. But observation.
But Arnab, I mean, I would note that things that act like cigarettes have been increased this year.
Okay, listen. Can I wrap up by saying this? Arvind, listen. Arvind, Omkar Goswami says that's
an outstandingly clever man all the way through. This is a very clever answer. Tax like cigarettes. Very good one.
Okay. Okay. Now I'm going to hand over to our colleagues in ET Now to take this forward. From Times Now, thank you. Don't go away. ET Now may have more questions for you. Okay.
Okay.
Thanks so much for that, Arnab. Lovely having that exchange. But Dr. Arvind Subramanian, before we let you go, quick questions from our panelists. I think Mukesh Bhutani has one for you first. Sanjay Nair, CEO of KKR India, also in our panel. They also have a question for you. Mukesh, you want to go first?
Dr. Subramanian, hi. This is Mukesh here. You made the tax professional suddenly very important after this year's budget. I have one question. Congratulations, firstly. It's a great budget. There's lots on the tax administration side. I wanted to understand on the one-time settlement for Vodafone kind of cases, which is on the indirect transfers. Are you bringing a legislative amendment? Because this was the statement that was made earlier in the budget by your government, and it was made even by the earlier government. So are you saying that you're bringing about a specific one-time scheme within the income tax law to be able to settle disputes where you're saying pay the taxes and we will give you a waiver from interest and penalty?
Exactly. Pay the principal and we'll waive the interest. Yeah, it's a one-time facility. That's right.
It's a one-time facility. Sanjay, you want to go next?
No, I just had a question. I think we heard the finance minister say something about the holding in the PSU banks. It wasn't very clear whether he mentioned it. They're happy to go below 50%. Maybe you can clarify that. And the second question was, why did we not go for a bigger bang resolution of the banking capitalization issue? I'm just wondering, this was an opportunity of either creating something more centralized, something more of an asset reconstruction model. I'm just wondering, why did we miss that opportunity?
So on the first question, I think what the finance minister said was that that the government would consider the option of reducing its stake in IDBI to below 50%. On the second question, I mean, we have a bankruptcy law. Now we're introducing a law that would have similar things for financial companies, like a resolution corporation. So that creates the legislative framework, makes it clean and uniform to cover corporates, but also financials. Now, in terms of the big bang on the, I presumably you mean NPAs and so on, I think there is a strategy in view. The RBI is doing the asset quality review. We have Indra Dhanush and a commitment to come up with more resources should they be necessary. And then I think we will review this going forward, and if it's working, we should go with it. If it's not as effective as it should be, then of course we will reconsider it.
Arvind, Maithili here. In the mid-year review of the economy, which you presented in late December, in fact, less than 2 months ago, you made a very strong case, in fact, for being a little relaxed about the fiscal deficit target. Your case in the economic survey was a little bit more nuanced. Yet today you give a very strong defense of walking the fiscal straight and narrow. So what made you really change your mind on the entire idea of public sector investment being the trigger for growth in the economy?
So I think, Maithili, I think there's, what we said both in the mid-year and in the survey was there are very good arguments on both sides. The key thing is to balance the need to maintain macro stability and credibility with the need to ensure that, you don't, via the government, put on too many brakes on economic activity. And if you actually look at the structure of the deficit and how it's going to be accomplished, I think both are going to be accomplished. So that's the sense in which I think it's a kind of win-win because you don't borrow more from markets. Therefore, interest costs, credibility will not go up. You don't put any pressure on bond rates. But because you're also not raising taxes, you're essentially going to meet them through non-tax receipts, which means that your aggregate demand, you're not jamming on the brakes. And I think that's the way we've squared the circle in a way that I'm completely comfortable and happy with.
All right.
And this is something that, what Swami has been saying. No. I mean, this is the strategy that, for example, Swami has been advocating. Several people have been advocating as well. That and therefore, I think that we get the best of both worlds: stability without jamming the brakes on economic activity. In fact, if anything, to provide a gentle stimulus as well.
Dr. Arvind Subramanian, such a pleasure having you with us on the Times Network, on ET Now and on Times Now, analyzing the budget and taking all those questions from a host of experts right here on ET Now. Thank you so much, sir, for sparing the time and joining us right here on ET Now. I want to toss it back to Nikunj to get a view from some of the top market participants who are joining him in the studio.
Sandeep, I just want to mention one thing. Look at what ITC is up to. It's down 4.5% in an otherwise market which is completely recovered. ITC is hammered out.
And the other one is actually United Spirits, which has also gone the other way around. Prashant, looks like the real Oscar today has gone to the finance minister because the way markets have rallied, the event risk is behind us. So in terms of positioning, can I safely assume that nothing changes for you?
I think, in my view, and that's what I've been emphasizing, that the growth in the economy can be led by recovery in the capex, and I think this budget stays firmly on that path. And I'm glad that the fiscal deficit is at 3.5% because now I think the ball clearly is in the central bank's court, and inflation has fallen by 5%, 10-year yields have fallen only by 1%. And I think there is a lot more room for interest rates to fall going forward, which will aid economic recovery quite strongly, in my opinion.
Sharma, I'm coming to you in a second, but Prashant Jain, I've got one more follow-up question. Whereas we are focusing on the investment side of the economy, what about the consumption part, the short cycle? Consumers will get more money, the pay commission recommendations will be implemented, interest rates will come down. Can we ignore that aspect?
No, I don't think we can ignore that aspect, but so consumption is more like a all seasons, kind of a thing. So consumption grows every year, but when the investment cycle is so weak, I think the economy has to grow by creating more investments, which in turn create more jobs, and that can lead to further consumption, and I think that's the only sustainable way to grow from here, in my opinion.
Shankar, back to basics tomorrow morning, or this budget is going to kindle what could be called as the economic cycle in the medium term?
No, I think, as we discussed in the morning, I think the government basically floated this trial balloon of bringing in this long-term capital gains, and the market sold off prior to the budget itself. So there is obviously, when that doesn't come, so as we discussed in the morning, then that is, a cause for some minor celebration, by people. And I think that's the reason why the markets have recovered. But, from tomorrow, we are back to the grind of, facing this global challenge. I hold the view now that rate cuts are going to be very hard to come by, because it's not about the inflation decline, it's about the currency as well, and the currency has been in a free fall versus the US dollar. So we are going to be 70 by the looks of it, and obviously when you're hitting new lows on the currency, then the bond yields obviously can't come down to 5% or 6%, which is why the bond yields have actually rallied in the last few months' time. Actually, I was wrong. I did believe that bond yields would actually be closer to 7%. So it has gone completely against my expectation. So my belief is that India has been a very disappointing market in the last few weeks. It has scope for a relief rally purely as a counter to having underperformed. But I don't think this budget or anything that the finance minister could have done really changes the trajectory for India in face of a very, very troubled global situation.
Nilesh, there's no taking away from the fact that the volatility is going to come back to haunt us. But do you think this budget announcement, and given the kind of rural thrust there has been from the finance minister this time, it sort of opened up newer investment avenues, which one had completely missed all of last year?
Absolutely. I think this whole path of fiscal prudence, I think is going to do a lot of good to the economy. See, if you really look at this budget is for the agri and the rural. This budget is for the middle class. This budget is for the small taxpayer. This budget is for people who are going to receive the bounty through the 7th Pay Commission, the OROP, all of that. More money in the hands of consumers.
No wonder there is no tax on the BD.
So I think if you really look at it, I think one big sector which I think can benefit tremendously from this is the consumer durable space. I actually see tremendous demand for that sector over the next 2-3 years. I see that one sector to be an outlier in terms of being a huge beneficiary of what this budget is going to do. So I think that's one sector to really watch out for going forward. One is that. Two is, I think, the whole housing and the realty space. I think in the whole noise, I think affordable housing was given a huge fillip. The fact that you're going to get more exemptions.
I need to go to Jahangir Aziz also. And Jahangir Aziz, are we, do you think the big messaging is really the housing sector, the multiplier effect which will happen because of the housing sector and the tax ops which have been doled out will have far-reaching consequences for the economy?
Not really. I think, what has happened is that at least the budget has moved away from this obsession it had on public investment crowding in corporate investment. We tried that last year. It hasn't worked. At least finally the budget is acknowledging that there are other places within the expenditures or within the savings that households do, particularly on healthcare and education, that more government needs to do in order to reduce the massively, almost ridiculously high out-of-pocket expenses. So I think that structural shift is important. I think the 3.5 is important to keep macroeconomic stability. And what I'm really surprised, however, is that the chief economic advisor talking about that there is no real fiscal withdrawal. Look, whenever you cut the fiscal deficit, there is fiscal withdrawal, there is demand withdrawal. But it's a good demand withdrawal, not a bad demand withdrawal. If you look at this year's FY16 budget, the target is 3.9, of which I think about 0.1, 0.2 is going to be revenue raised from disinvestment. So the real fiscal deficit is about 4% or 4.1%. This year's target is 3.5, of which I think 0.4 is supposed to be from a disinvestment. So the real fiscal deficit target is not 3.5, but 3.5 plus 0.4, 3.9. So you really have about 0.2% of fiscal withdrawal. It's not much, but to say that there is no fiscal withdrawal, I think that would be a bit too much. But I think it's a good fiscal withdrawal. I think the trade-off with macroeconomic stability and growth, I think they have taken the right trade-off, and I think it's a brave call to stick to 3.5%.
Okay, and hold your breath for another big network exclusive, both ET Now and Times Now exclusive, and it certainly doesn't get bigger than this if you have Sunil Mittal, the chairman of Bharti Group, talking exclusively to ET Now and Times Now for his first reaction ever to Indian media on the budget.
Thanks for that, Nikunj. It's a man you don't see very often on Indian television. Sunil Bharti Mittal, chairman of Bharti Group, never before on Budget Day, joining us live on the Times Network, on ET Now and Times Now. Mr. Sunil Mittal, thank you so much for joining us live and exclusive on the Times Network. We are beaming live on ET Now and on Times Now as well. A lot of questions from our side. Arnab as well from the Times Now studio has got a lot of questions for you. First up, on balance, how does the budget look to you? Do you think there's enough in the budget to kickstart the investment cycle? Because that's what's got most economists worried, the fact that the investment cycle hasn't yet turned despite 19 months of this government being in office. Is there enough in the budget to kickstart the investment cycle?
Well, I think the finance minister said it right in the beginning of his speech, that we are announcing or laying out this budget amongst a lot of global turmoil and headwinds, and that the India clearly sort of stands out amongst the Committee of Nations. The budget is largely on expected lines, I would say. The government's thrust towards kickstarting the economy is very evident. The 9 pillars as defined by the finance minister are clearly in the areas where one expected action, which is rural, agriculture, health, education, financial reforms, generally tax reforms, etc., are all the ones that I think the country was clearly looking forward to.
Hi, Mr. Mittal. Good afternoon. This is Arnab here. We'll keep tossing questions. Welcome to our Network Exchange exclusive. And thanks for joining us. I know how usually reticent you are and have been after budgets. It's great to see you today. Now, we have got some experts. They're also going to throw a couple of questions from their perspective. Tell me, does this budget give you a sense that this government is sure enough about improving India's ease of doing business ratings? If you were to look at it from that perspective, would you be satisfied?
I would say yes. I mean, this is one area where the Prime Minister, the Finance Minister and the government have been talking about it. And I think through this budget, they have delivered some clear messages that India's business environment will keep on getting better under this government. In particular, I would say, I mean, I've been globe-trotting for the last few weeks. The retrospective tax keeps on coming back again and again. And I think a very clear, bold window has been granted to Vodafone, Cairn, Nokia and many others who can take this window now to settle and move on and shut this case once for all. So largely I think it's towards the area of ease of doing business. The Finance Minister also mentioned certain amendments are being brought onto the Companies Act to ensure that the ease of doing business becomes a reality in this country.
Yeah, and also one-time dispute resolution scheme for all retro tax cases. Sandeep, over to you.
That's right. Mr. Mittal, we've had this heated debate on the fiscal deficit and the fact that the government should have probably relaxed the target and given growth a chance. Are you disappointed that the government hasn't done that, or are you happy that they're sticking to the 3.5% red line? Would you have rather had the government relax the target, give a bigger investment push?
Well, you know, as an entrepreneur, I've always been more towards spending by the government, especially when things are going well in the country. The government should spend as much as it can in terms of kickstarting the economy. But I guess you hear the voice, or rather the same voices of economists over the entrepreneurs, and you have to stick to a fiscal responsibility rather than spending your way through growth. So I think a balance has been achieved. 3.5% should satisfy all the voices that were trying to caution the Finance Minister of not breaching the fiscal responsibility. And on the side of investment, I think the finance minister has been able to get some money on the table for a lot of new projects.
Okay, so a couple of questions also come to your way from some of our experts. I'll just put a small one. Though I don't agree with this view that if you necessarily give a little bit more disposable income, there'll be a positive impact on demand, that it'll happen, but that it'll have a reflection on growth is something that I'm not personally sure of. In your view, has Jaitley's third budget done enough to put more money in people's hands?
I think it's always, as you know, Arnab, it's a tough balance when India needs so much money towards the social areas. And I think one of the key highlights of this budget is, ensuring that the agriculture stress is taken care of, ensuring that rural missions, MG, Narendra, many other programs get the money that they want. In fact, Narendra has got the highest outlay this year. All of this required money for the finance minister, and he couldn't have put more money in the hands of individual taxpayers. So I would say, by and large, the money that will reach the rural areas through various schemes like Swachh Bharat, I mean, all this is going to be spent out, and this will finally reach the society in various forms and factors, and to my mind will therefore generate more demand.
Arnab, I think our panel here also has a lot of questions for Sunil Mittal. Swami, you want to toss one to Sunil Mittal?
Yes, Mr. Mittal. Okay, it's budget day today, but if you go a few days back talking to people, the business mood in India is very sour. People are not happy, people are not optimistic. So I would like to ask you three quick things. First, do you really believe the 7.5% GDP growth, the official data, which lots of people say, look, all the other stuff, including, Suresh Prabhu shows railway freight going down 8%, that this doesn't gel, we are really going much, much slower than that. Secondly, apart from the budget, would you say that unless there is a significant improvement in the interest rate, would you say that there needs to be a significant depreciation of the exchange rate to enable Indian industries to get out of this very sour mood they have been in?
Well, I think, Swami, to the first point, I have to say, despite India growing at 7.5% or thereabouts, the general mood with business community has been one of caution. And this is a paradox that is hard to explain. You meet people on the street, I'm sure you meet a lot of businessmen as well. They are holding back their investments. And I've said this before, while you see FDI almost going all the time in the upwards direction, the local investment has been lacking. And therefore, to your point, yes, people are generally not as optimistic about the growth of the country as the country itself is showing in terms of its GDP growth rates. When I go outside to various countries, I meet people. India is very clearly shining. People want to invest in India. So I think this paradox needs to be dealt with by putting more investments, at least by some of us key leaders in the industry, and I can only speak for myself. For Airtel, 15-16 has been the largest investment cycle ever seen in the history of Airtel. And there are other large companies which are investing, but somehow you are right. The general impression is that the industry is cautious and are waiting for something more to happen. And I don't know what that more is, because the government is really wanting growth by way of investment, and a lot of investment pushes being given through various announcements and budget, of course, today.
Sure. Mr. Mittal, broadly, before some experts here in our studio come in, was corporate India not expecting big ticket announcements? I mean, would you expect the government to play safe? Was there really any expectation of big ticket announcements this time at a real level?
I think two areas. One, banking reforms, and some move has happened there. I've heard some experts speaking that 25,000 crores is not enough. I would say it's a good start, and I think the finance minister could possibly give more money for recapitalization of the banks. That was one area where a lot of noise was heard. And I think the other was in the area of infrastructure development, and infrastructure push has been given, and I think government is also committed to closing the last mile of hundreds of projects that are languishing out there, and that should relieve a lot of infrastructure players. So I would say, all in all, you can say corporate India could have expected a 1% tax rate to go down. I think that's been a surprise that despite the roadmap for exemptions have been put out in the budget, the drop of 1% which was expected this year has not happened. But I would say equally for new manufacturing, taking Taking it straight to 25% by not seeking any exemptions or accelerated depreciation is a good step.
I think one area they could have done more is for startups. You know, the 100% exemption on tax of profits for 3 out of 5 years proposed for startups. I don't know, startups may take longer to actually generate profits. So I don't know how much of an incentive that particular one is. Questions for you, sir. Coming in, Sunil Alag, let's keep it brief. Who has questions here for, okay, we have Navika, we have Omkar Goswami. We'll take 3 together.
I'll take,
it's becoming a press conference.
No,
yes.
It's, like Swami just raised a question with you, Sunil, on bank rate and interest. That's to be done by RBI. I don't think that could have been done in the budget. That's just one point which was not necessary. But one very key thing which you raised right now is that I was going to ask you that earlier, is that the industry now has to come up, and you're already doing it, but they have to come up and play the role as well and not keep waiting for incentives to come from the government. So some thrust in domestic investment has to take place, which you're doing, but I don't see it happening with all. And how do we encourage everybody in India? Because demand is going to get generated, that should lead to it, but it's still, everyone in India waits. When is the incentives going to come? When my taxes will come down, that's when I'll invest.
Yeah.
And maybe we need a change in that attitude amongst industrialists.
Okay,
yeah, and Sunil, between me and you know that there are large punters, and I call them punters, people who have been investing big, are currently caught in a bit of a jam. They have got too much debt from the banks. Banks have stopped their lines of credit to them. Many of the projects where billions of dollars have been spent have not been closed towards the last mile, so they have not started to generate revenues. So I would say that if you take the top 50, 60 houses, 60, 70% of them are currently caught in a big debt issue with the banks, and with banks not willing to lend them any more money because, rightly so, because some of the projects have got stalled. So it's a chicken and egg problem. How do they close the projects? How do they start generating revenue to satisfy the banks and then get more money to put out more projects? So I don't know when will this chain, which has been broken, get reinstalled. But, the large, big businessmen are currently waiting on the sidelines.
Mr. Mittal, just to pick on a point that Arnab was also making just a short while ago on big ticket reforms and whether corporate India's expectations were muted. Would you have liked this budget to have taken some more bold steps on the lines of privatization, maybe labor reforms, bring down government stakes strategically in a lot of other companies? Would you have liked to have seen some of that? Because politically this was the best time for the government to act in that direction.
Well, I would say labor reforms and all, we need to really look at the states now, and states are getting the cues from the central government to make business an easy way of moving for the companies and corporates. So we'll leave the labor reforms into the hands of states. On the divestment or disinvestment program, I think the government could have certainly been much more bolder than they have in this budget.
Okay.
The target should have been much bigger, but I think we should also be aware that last year the budgets, the target was not met. So maybe the finance minister is a little bit more cautious this year, but they have an opportunity to do a lot more there.
Well, I mean, if they meet those targets, it's going to be twice what they achieved this year if they meet the reduced targets. Navika.
Correct.
Mr. Mittal, the real question is, you've been talking about the banking sector and the problems therein, and how the line of credit has been frozen to several big companies, which is why I'm asking you, is the 25,000 recap something that's enough to kickstart that entire sector, that entire cycle of investment and credit offtake?
Well, I think that's why I said the experts have been saying 25,000 crores is far too little. But Navika, we must be conscious whether it's 25, 40 or 50,000 crores. This money is not going to go into the banks to again fund the distressed business houses. Very clearly banks are now getting very tight, very tough on recovering their monies. RBI has been prodding and pushing them to declare NPAs and declare willful defaulters. So situation out there will not be resolved by putting more money into the banks. Banks just need to be more healthy and capitalized for sure.
Okay,
but I think banks, the bankruptcy law, the bankruptcy law which is being introduced, I think that may just do the job that the banks may want to do.
Mr. Mittal, two questions coming your way. It's all right to say that we have a dispute resolution mechanism and Vodafone case will perhaps be finally done away with because the government is very categorically saying withdraw your cases, pay the liability and you're good to go. But as long as you do not put it into the statute, are you going to really see a resolution? That's question number one. And question number two is, at a time when demand is low, increasing cess, the agri cess, the infra cess is perhaps going to dent it even further, will it not?
I know, but as I mentioned, we have seen the finance minister putting a lot of money into his 9 pillars. I mean, where is he going to get the money from? Eventually, the successful corporates and people with higher incomes will have to pool in much more money than they have in the past, whether it is the surcharge on the 1 crore income tax going from 12 to 15%, or the half percent cess that is coming on the corporates. It is bound to happen. I mean, where do you bring the money in from?
Okay, so Mr. Mittal, ET now has a couple of more questions for you. But at this stage, I'm saying thank you to you for joining us from Times Now. Don't get up because ET now has a couple of more questions for you. Mr. Mittal, nice talking to you. Okay.
Thanks, Arnab.
All right, Mr. Mittal, thank you very much for staying on with us. I know we were talking about disinvestment and you said that it was not met last year, and which is perhaps why the target has been lowered. If you actually see disinvestment targets for the last 10 years, they've never been met. How optimistic are you that the government is now going to leverage the stakes that they actually have and sell them in the markets? They haven't done that when the markets were at a high. Do you expect them to do that when markets are, up 20% of their recent highs now?
Well, I'm a big believer of government divesting as much stakes as they can in most of their public sector units and make them very well professionally managed public companies. We have seen that successfully happening in all the developed countries of the world. And I think India, as it grows richer, as it gets better governed, as it comes into being a better and more developed society, I think my own view is most of these companies must be run as very successful public-run companies outside the control of the government. To that extent, the government has large pools of public sector assets. And in my own way, if I have to give one message for the finance minister and the government is, be bold and brave and do much, much larger disinvestments than they have been planned now or in the last few years.
Mr. Sunil Mittal, thank you so much for taking time out and joining us for that big network exclusive. Really appreciate you joining us on Budget Day live right here on ET Now. Thanks for joining us on the show. Nikunj, over to you for a quick market check before we toss to Jayant Sinha at 2 p.m.
Well, Sandeep, things are looking stable right now, and I've got Nilesh Shah of Kotak AMC right in our Mumbai studio. And Nilesh, thank God it's over.
Yes, I think the budget has come well within the constraints. And the most important thing is the fiscal deficit maintenance. I mean, one can argue that 25,000 crore for PSU bank capitalization is low.
Let's talk about actionable stuff. Fiscal deficit, good news. No long term, good news.
Very good news.
What is the actionable thing now?
The other thing which is important is that they are encouraging credit transactions and discouraging cash transactions. Okay. This is positive from a longer term point of view.
So how does one make money post the budget now? Let me ask you a simple and a straightforward question.
Invest in Kotak mutual fund schemes.
Apart from that.
I think it's time to be an investor. Our markets will now depend upon global factors for sure, but local factors are slowly turning positive. You have parliament session which should pass bankruptcy bill. You have monsoon which should be good because of La Nina. You will have interest rate cut coming from RBI which will be supportive for earnings growth. You'll have liquidity increasing in the system post-March when the government starts spending money. So all the local factors are turning pro-market, and if we get support from the global factors, then we could see achhe din for investors. So it's time to get invested into the market.
We made a double bottom today. So do you think 68.50, 68.60 is the bottom for this market?
So in the morning you asked me is 7,000 the bottom for the time being, and I said for the time being till 11 o'clock. Now I will say it's for the time being for at least till such time we get clarity on the monsoon, provided globally we don't see too much of damage.
Okay, I just want to mark some stocks here, and the top stock which I want to mark here is ITC, which has recovered even though excise duty on cigarettes has gone up. And United Spirits is the other one. There was a talk of a sin tax on for the liquor industry, as that's not filtered in. So just to mark some stocks here, ITC up more than 7, 8%, 9% to be precise from the day's low. United Spirits also no sin tax. So United Spirits also from the day's low has actually recovered quite a bit. That's a typical budget reaction. Other budget reaction is ONGC, duty structure has been changed. ONGC will gain disproportionately. Cess, however, the Cess structure has been changed, and they go 204 rupees for ONGC there. And that's the broad thing.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.